An offset mortgage can be a great way to help you save money and help you pay for your mortgage early. But what is it and how does it work? Before we get started, I'd really appreciate if you could leave a like on the video and subscribe, turn on notifications to make sure you never miss an upload. So firstly, what is an offset mortgage? An offset mortgage will let you basically link your current account and your savings account to your mortgage. The total savings amount is offset against the amount that you originally borrowed, and you only pay interest on the difference. So let me just give an example of this. Let's say, for example, you had a mortgage, say, for example, £200,000. Let's just say, for example, you had savings of, say, for example, £200,000. What you would do is you would have your mortgage balance, which is completely offset by your savings balance. This basically means you wouldn't pay any interest on your mortgage payments whatsoever. The amount of money you would have paid on your mortgage payments is then paid directly off the capital. So let me give you an example. If, say, for example, your mortgage was £200,000, let's say, for example, you had that over 30 years at, say, 5%, your payments would be just over £1,070 a month. And the term for that would be around about 30 or so years. Now, using an offset type mortgage, it basically means that the £500 a month you were paying off to interest, you're now no longer doing that. This brings down your mortgage term by about 12 years to just over 17 years and will save you about £180,000 in interest, which is absolutely incredible. Now, I know not everybody has the exact same amount which they can offset between their mortgage and their savings, but even a small amount of savings can make a really, really big difference. So even if you only had, say, for example, 20, 30, 40, £50,000 worth of savings, that can make a difference to your total overall savings that you're going to get. So let's use another example of an offset mortgage. This time, borrowing around about £100,000 with, say, for example, £20,000 worth of savings. Still a really good amount of savings, but having an offset basically means you'll only pay interest on the £80,000. So what that means on £100,000 worth of mortgage, let's say, for example, we had that over 30 years, let's say, for example, 5%, the mortgage payment would be about £537 per month. A good chunk of that's going to go towards paying off the capital rather than paying off the interest. So with £20,000 worth of savings, it means that you're going to reduce your mortgage term by around about 7 years to around about 22 years. That's going to save you somewhere in the region of around about £50,000 in interest, which is absolutely brilliant. Thanks for watching. Click here for another helpful video just like this one.